Alright guys, welcome back to another video. This is Daniel with Leon Investments, bringing you another trade recap. This time it's going to be on Google stock. So I did trade this a couple of times as the trend played out in my direction, and I'll show you the logic behind why I decided to enter a trade. Now, I do trade stock options, but this could be, the logic could be applied with shares as well. And if you're interested in learning how to trade stock options, I do have a complimentary discovery call that you can schedule with me to see if we're a good fit, so that I can consult you on how to properly trade stock options to amplify your portfolio returns and manage your risk. With that being said, let's get right into the video. So Google stock was a stock that I had a lot of conviction on, and I'll tell you why. During this time, we had a strong sell-off. And during this sell-off, price fluctuated to create what looks like an inverted head and shoulders. An inverted head and shoulders is a chart pattern that indicates that bullish momentum is building to the upside and that buyers are stepping in. And so what I like to do is I like to buy into weakness and sell into strength. So what does that mean? Well, as the stock price is falling, I like to buy into the stock, and as the stock price is rising, I like to sell my position to take profit. So I sell into strength as buyers continue to push the price higher. And that's what I did here on Google stock. So going back to this inverted head and shoulders pattern, during this price fluctuation, I was already in a trade, in a bullish trade. And so as this right shoulder was forming, it was building more conviction on the trade, and I started to allocate some more capital, even though my average cost wouldn't really benefit much, just because I had that conviction and I wanted to take on the additional risk. The setup was too good to not allocate some more capital into the trade. So usually what happens on an inverted head and shoulders pattern is you have a strong breakout to the upside, followed by a retest of what was past resistance to be now support. Resistance is simply where the price of the stock is being rejected at a certain level, and support is where buyers are stepping in to support the price to go higher. And so that's exactly what we saw here. We see a breakout, a retest. In this case, we have two retests, so that added more momentum, more bullish momentum to the breakout to the upside. As we're dipping, buyers are stepping in, driving price higher. Dipping again, buyers are stepping in to then drive price higher. And I believe one of the news catalysts that was released on Google stock during this time was that the DOJ was investigating Google for monopolizing search. And for that to drive price down, it just simply says to buy more of the stock. I mean, we're talking about Google stock, and they're not going to go out of business because the DOJ has a case open in regards to them monopolizing search. And I think it was that the DOJ Department of Justice wanted them to sell Google Chrome, to basically sell Google Chrome. Even if they were required to sell Google Chrome, I'm sure they would have a legal structure put in place so that they still have a level of control over Google Chrome. This negative news article really drove the stock price lower. I don't remember exactly where it was that drove the stock price lower, but I just remember I was building my bullish trade. So I was buying call options, in other words. And then I did sell my first position as I started to see some weakness here on this candle. The stock price really did go up, and then it started to sell off where we have past resistance. And I closed my trade, and then I started to build another trade with less risk to the upside to profit on the upside. And that's exactly what happened. Google stock trading near the 200-day moving average. At the time, the stock had a PE ratio of 20 or 25, which is perfect. Stock trading near the 200-day moving average. Inverted head and shoulders forming on the stock chart. PE ratio near 20-25. Bullish divergence forming. Bullish divergence is located on the MACD, where the price of the stock falls while the momentum on, or the lows on the MACD form a higher high. This is known as bullish divergence. And so all of these factors played into my trade. I consider all of these factors to buy into Google call options and generate $27,000 in profit. Take a look at the proof. The proof is in the screenshot. So taking a look at past price action for Google, I mean, we're talking about Google, a stock that continuously uptrends and continuously innovates and is a leader in AI technologies. They're not going out of business anytime soon. So anytime the stock is near the 200-day moving average, you can consider that a bargain, especially with the PE ratio of 20 to 25. Back here, we also had an inverted head and shoulders pattern where it broke out, retested, and it continued higher. Right now, what we're doing is forming what is known as a flat symmetrical triangle pattern, which is a bullish continuation pattern. And I do think we'll go to 212 before pulling back and then maybe creating higher highs. As you can see, it's flat at the top, and then the support level is inclining. So what does that mean? That the sellers are holding their line, and then buyers are creating higher lows, which they are in control of the trend. Higher lows, meaning we're in an uptrend. If we're in an uptrend, that means buyers are in control. And so now we're breaking out, we retested, and now we may go higher next week. On top of that, we take a look at the Mag 7 ETF, which is a collection of the 7 mega cap stocks in the market. Google, Amazon, Meta, Microsoft, Apple, Tesla. These stocks were forming this nice bullish flag pattern. Right here we had a symmetrical triangle, which is a bullish continuation pattern, and the stock price did rally, forming a flag, and that is a bullish continuation pattern as well, which I do think we're going to rally to 63, which is a 12% increase in this ETF from the current price. So I do think that Google stock, considering that its technicals are aligning with the broader ETF, I think the stock will rally to 215 or 217 with, with one rally before any pullbacks, before any significant pullbacks. But yeah, this is the logic behind the trade, the technical analysis behind the trade that I made that yielded $27,000 in profit. I do trade stock options, so if you want to learn how to trade stock options, feel free to join my Discord community in the link in the description. There's some basic education on trading in that channel, and you could also engage with like-minded individuals via text and voice channels. And if you're interested on paid service, I do offer consulting where I guide you on a one-to-one virtual meeting on Google Meet, and I will show you exactly how to manage risk, how to trade a stock option, what strike price to choose, what expiration to choose, what are stock options, and how to increase your probability and potential profit on a trade. So if you're interested in that, you can schedule a complimentary discovery call, link in the description as well. See you guys on the next one.